you disclose the fund source. So they are saying that the Income Tax Act has the power. Income Tax Act is actually giving you the power to tax even the share receipts. I would say that, in this case, I have all the legitimate records to prove what is the source of income. So why should the assessing officer not agree with me? But this is what arguments that they are taking. As I said, frivolous arguments, only one, which is 247, which has some whatever which can hold, but otherwise not. Another argument is how they have tried to put it under the realms of TP is this: the expanded definition of section 92B, the definition of international transaction. They have said that capital financing is a word which has been inserted, and issue of shares is a capital financing. And since issue of shares is a capital financing, it very well fits within the definition of international transaction. My humble submission is, the word which is used as capital financing, it has to be read, when you go to interpretation of statutes or law, you have to read it harmoniously. Read it with what are the words which are following. It says, including any type of long-term or short-term borrowing, lending or guarantee, purchase or sale of marketable security, or any debt arising. Nowhere it is talking about issue of shares. It is talking about lending, borrowing, or purchase or transfer of capital assets, or purchase or transfer of shares. It is not talking about issue. Even here the word is not covered. They are trying to cover it. So this is another point which I spoke about, the splitting between 100 and 150. If you look at the Indian transfer provisions as they stand today, under the Indian TP Act, there is no provision which provides for a secondary adjustment. I don't know whether somebody discussed about secondary adjustment, but secondary adjustment in TP means you have done a primary adjustment. Let's say you bought a good at 100 rupees, the value has been enhanced to 150. So on that 50, if a recharacterization of that 50 is being done, or additional interest is being included, this is called a secondary adjustment. Secondary adjustment globally, under any statute, the power has to be derived from the existing statute. As they stand today, the Indian Transfer Pricing Act does not give you the power to compute a secondary adjustment. If there is no express provisions under the law which gives you the power, you cannot do it. It is fundamentally and legally incorrect. So the High Court has to give a verdict on this, but that's where it stands. Secondary adjustment. Sorry? Yeah, so the 50 which the interest on 100 which they are computing is a secondary adjustment. You don't have the power. Also, if you look at the other thing, they in some way are recharacterizing this 100 from equity to a loan, which you cannot do under the Act as of today. That power is there under GAR. And GAR is effective 1st April 2016. It's not there today. So if you don't have power under law, you cannot derive superfluous power from somewhere. It's not permitted. Under the Act, you have to go what is written under the Act. Valuation approach, I think a cardinal principle which has been appreciated and recognized. DCF has been recognized as an accepted TP principle, which is to be applied in all cases. Most of the cases, if you see, there are several rulings on this. There is a ruling in case of Tally software, SNDAS, etc., which have all upheld the principle that for TP purposes, the right valuation approach is DCF. So they are also upholding that. Nobody is challenging that. So that's it. Any questions? I'm overshot by 10 minutes. Any questions I will be happy to take.
You talked about the rights issue. It will not make a difference yet.
Yeah.
You just.
What are you doing? What is the difference between a rights issue and a normal issue? What are you doing? You are saying that you have 5 shares. I am issuing you another 2 shares. Or I am giving you a right to issue 2 more, buy 2 more shares. Right? So it's for all shareholders. To all shareholders. So, but see, again, it stands on the same footing because it's an issue of shares that you are doing. It is not transfer of shares that you are doing. It's just fresh issue you are doing to the existing shareholders and you are giving them their right. Or a bonus issue. You have 5 shares, I am giving you 1 more share. What you are doing in this case again is you are issuing shares, you are not transferring shares. That's the difference. So issue of shares stand on a different footing. Transfer of shares, buyback, they stand on a different footing. Transfer, buyback, they are taxable transactions, but not issue.
In fact, in the current assessment year, I have got relief on the rights issue, which were done at March.
You are lucky. I'm just 2 minutes, I'm wrapping
Please
up.
carry on.
Then for all the shareholders, one benchmark is other shareholders.
So, anything again, we will be happy to take offline, I think. Can't take apna madam's time.
Not at all.
I'm actually overshot now.
Actually, there's a break and I think it's good for them.
Almost done, maybe last 1 or 2 questions, happy to take. Okay, yeah.
In case of a 100% subsidiary, there may not be any relinquish of rights, but if they are valid shareholders, then of course some rights are transferred from A to B in terms of valuation if it is not appropriate.
I'm still coming back to that point. What is that relinquishment you are doing? That fair value you thought in your wisdom based on the valuation that you have come up with. You said that right number was 100. I can deem that number to be 1000 and say that 900 is what you have relinquished. The fair value which you already derived based on some valuation report is what was the fair value. So where is that relinquishment? There was no one who prescribed that 1000 is the right value and you took only 100. It is your best estimate that you derive, and the differential is what you have. Best estimate is what you have used as a transfer price. So where is that relinquishment or extinguishment of right? Right? Okay. Thank you. Thanks everyone.